Okay, welcome back. There's 15 minutes to go for the pre-open session. Anuj is here standing by with how he's looking at the trade setup. Anuj, good morning.
Good morning, Prashant. I'm starting with an interesting image. This is a correlation between the height of the Fed governor and the interest rates in the US. Remember Paul Volcker, at his time, the interest rate had peaked at 16%. Paul Volcker was almost a 7-footer, right? After that, we had Ben Bernanke, then Aaron Greenspan first, then Ben Bernanke, then Janet Yellen. And the height kept going down and the bond yield kept coming down. The interest rates, of course, were near zero at time of Janet Yellen. And then comes Mr. Powell and he says, okay, let's change things back. Maybe not to the Volcker zone, but at least back to the Ben Bernanke era and maybe even higher. And what was very interesting was if you heard Powell's commentary yesterday, the moment he started speaking, the market started making big red candles. That was his impact yesterday. It was in the green till then. The markets got what it wanted, basically a pause, hawkish pause. But after that, the commentary that, maybe there will be one more rate hike this year itself. And next year, the cut also perhaps would be much later. So I think all of that led to that big decline in the NASDAQ. And of course, that's something that will have an impact on Indian IT stocks as well today. Because, there will be a bit of a valuation reset. So the Nifty IT, which has gone up about 5.7% this month, that can see some profit taking. Also, yesterday's close was very bad on the Nifty. At no point was there an attempt to even see one green candle, and the market closed at the lowest point of the day. And there's a bit of a triple whammy for the market. The three big stocks, HDFC Bank to begin with, yesterday saw delivery selling of 5,500 crores. The stock was down 4%, the ADR was down 6%. So maybe there's more pain left, and the ADR premium has already collapsed to about 7% now. Reliance, there was no clarity on who sold in that block deal, but the stock was under pressure. And the third big sector, which is IT, could be under pressure, at least in the first half today. Let's see how the second half, shapes out. The Nifty needs to close above 19,792, which is the 20-day exponential moving average, to maintain its uptrend. In terms of levels to watch today, yesterday it was a bad day. So the first level to watch is the 20-day exponential moving average, which is 19,792. And the bigger support lies at the 20-day simple moving average of 19,672. And this is a zone which the bulls have to defend. On the Bank Nifty, we are very close to some big support levels. The 20-day exponential moving average is 45,211. And the 50-day exponential moving average is placed at 44,848. But more than the levels, the way the market collapsed yesterday, while it might have preempted some bit of decline in global market, the close was quite bad yesterday, and today we have the weekly expiry as well. Let's see if in the second half we have some short covering. That could be one hope, given the way the put-call ratio, etc. have collapsed, but that's only a hope right now.
So that chart which you put up, that pictorial graphic, height matters, right? At the end of the day,
Oh, absolutely.
it proves that. But by the way, Jerome Powell's term ends in 2028, so we don't have to worry until then. Who the next Fed chairman will be?
Where will rates go?
Where will rates go? We are fine for another 4 years.
just try to, make things interesting, trying to find, something. This morning, this picture looked quite interesting to me. And, there's actually quite a correlation between the height and the bond yields and the US interest rates.
Well, President Joe Biden, who he nominates next for, as Fed chairman, that 4 years later, let's see. I hope he's watching this chart as well. All right, Anuj, thanks a lot for that and have a good day.